Hello, everybody. This is Sree from BizBuzz. What matters the most in your business? And sponsored by My Work Belt. My Work Belt is a all-in-one software platform that comes with unlimited training and customization, particularly catering to service-based small businesses. And today we have Kish Rao. Kish Rao is a infinite banking and capital control strategist, particularly working with entrepreneurs and families. And his philosophy is to be your own bank rather depending on uh, traditional banks who makes you go through cartwheels to find a dollar for helping you. Kish, how are you doing?
I'm doing well, Sree. How are you?
Very good, very good. Kish, when you're talking about infinite banking, and we talked about multiple concepts, right? Velocity of money is one something that caught my mind. Now, when it comes to the small businesses, entrepreneurs, owners, what does it mean, a velocity of money?
Okay, that is a very, very good question. So we'll keep things simple. Velocity of money is simply how many jobs can a dollar do over its lifetime.
Hmm.
So, it's not just about the accumulation and collection of money because that's
Hmm.
what companies, that's what businesses do. They want to grow their business, they want to be profitable and grow their wealth.
Hmm.
I get it. That's the default way of thinking, and it makes sense. But how efficiently do you actually use this money? What does that mean? Does that mean once your net profit comes in, does it
Hmm.
just sit in the bank until
Hmm.
you needed to buy supplies, until you needed to pay for expenses, payroll, taxes, or does it just sit there and
Right.
just sit around? So velocity of money is basically making sure every dollar that you have is working.
Hmm.
It's doing something for you. You need your money moving,
Hmm.
hence the velocity of money. So let me give you an example.
Hmm.
Low velocity. Shree, you have
Yeah.
$100,000 sitting in your
Hmm.
business checking account for 10 years. It does one job. It
Hmm.
just sits there. It may accumulate some interest,
Hmm.
but
Yes.
forget about that. It's just sitting there.
Right.
So now let's talk about high velocity.
Hmm.
Save $100,000 helps fund business equipment.
Right.
This equipment generates revenue. This revenue generates profit.
Hmm.
And this profit creates more opportunities.
Right.
And the way this system works is when you pull the $100,000 out to help fund the equipment,
Hmm.
you still have that same dollar on the back end growing as if you
Mm.
never borrowed it. So you're using the same dollar in multiple times at the same time.
So is
And
that same thing what the banks are doing when I'm in generally the concepts that I hear when I am going to put $100 into a bank on
mhm,
a savings account or a money market, whatnot, the banks are going to lend the same $100 to 10 people, essentially making the interest out of 1,000 people for the same $100 that I saved in their bank. Is it the same concept or is it different?
it's a very similar concept, absolutely. It's very similar to what the banks do, but
Hmm.
with what we do, we create our own banking system. And this
Hmm.
banking system is where we store our money, where we bank our money. Now, the
Hmm.
money doesn't sit there. You put the money in the system. As soon as the
Hmm.
money's in there, you want to pull it out and start using it. Because the money in the system, once it's entered your system, it's going to grow.
Hmm.
If you don't use it, it's going to grow. But Shree, here's the thing. If you
Hmm.
pull it out, it's
Hmm.
still going to grow. So back to
Right.
this example, we pulled out $100,000 for to fund business equipment. So the money's being used to buy the equipment, but the money's still growing in the back end at the same
Right.
time. And it's because it's how it's designed.
Hmm.
And this is the hardest thing that people have to grasp. But once they get it, once
Hmm.
they understand, then all of a sudden,
Right.
They're going to want to put all their money into
So
the
now,
system.
generally, small businesses, they are always looking out for loans. I'm
Mhm.
looking for SBA loan, or I'm looking for other, either I wanted to buy an equipment or wanted to buy a building to run my business and all this. Now, what is your take on it? Would a small business owner should go for a loan, go for borrowing the money to buy the equipment and buildings or anything like that, or you should suggest a small business to refrain from it and look at a different opportunity?
Okay, so I'm always on I got the mindset personally,
Mm-hmm,
always use other people's money. Don't use your own
mm-hmm,
cash
mm-hmm,
for for making purchases, for investing. That's my philosophy. So getting a loan is good.
mm-hmm,
However, if you can get a loan from your own bank, that's better because you control
mm-hmm,
both sides of the equation at that point. So
mm,
you need a loan for this equipment, you know, you can go to the bank and borrow it. But when you go to the bank, what happens? You have to fill out all this paperwork. You
yes,
have you have to sit down with the loan officer. You have to go through a rigorous interview.
right,
What happens if they say no? Then you have to do the same thing with nine other banks until the 10th
right,
bank finally agrees with you. Next, you have to do the interest. I mean, there's going to be interest charges. You have no control over that. Then you're required to pay every single month. What happens if you miss a month, Sree? Are
right.
they gonna tell you, that's okay, you can pay it next month? No
That's
one's
not
going
going
to
to
do
happen.
that. No one's going to do that. Okay, now let's flip the script. Let's go to the Bank of Sree.
Yeah.
Okay, you own this bank, Sree. Now you want to borrow $100,000. You go to
Hmm.
your own bank.
Right.
There's two questions your bank is going to ask you. Number one, how much do you want?
Hmm.
Number two, where do you want us to send it to?
Mm.
That's it.
I mean,
Nothing
obviously,
else.
if your own self working as a bank, then that's the only thing that you have to answer.
Even still, even if you're borrowing it, let's just I'm going to have my daughter, you know, borrow money from me to buy
Hmm.
a car. She's 18 right now. In about 2 years, maybe three, she'll want to buy a car.
Absolutely.
And I'm not going to buy her a car. No, I want her to learn the value of money.
Right.
So I'm going to have her get a loan from me.
Hmm.
So I'll give her a $30,000 loan. Okay. I'll ask her how much she wants and where she wants it. So I'll do that. Now she's responsible for this loan. She needs to pay me back.
Correct.
Now, this is the Bank of Kishore. I'm not going to be as stringent as Wells Fargo or Capital One. However, she still needs to pay me back. She'll set up a 5-year plan and she'll pay me back. She'll get the value of the money. If she misses a month or two, that's okay because I control the bank.
You
Okay.
control the bank.
That's the
Yeah.
same thing that goes to the business. If the business owns the bank, they can control. Now, of course, they want to pay it back as fast as possible because the faster the money goes back into the bank, the faster they can borrow more money in it to
Right.
buy new equipment or make more purchases and essentially have their business grow.
Now, when it comes to using your own money and borrowing from your own self, sounds great if you have unlimited money or whatever the money that will be sitting in the bank
Mhm.
that you can use it for over and over. However, that's generally not the case with the small businesses, right? So they wanted to, let's say, if I have $100,000 in my bank, right? Now I would go for a bank and say, "Hey, I have $100,000. I'm going to put that as a what you call down payment for buying an equipment that is worth of $500,000 or so." Now, is that not a good use of the money, or you have a different theory on it?
No, that's great use of the money.
Mm,
Absolutely.
mm,
Even if you're purchasing something that's not related to business. So I work with both entrepreneurs. I also work with families.
mm-hmm.
So, and even my family per se. My daughter's 18 years old. She's in college. I pulled money out to pay for her college tuition.
Right.
Okay. Now, that's not a business. That's not an investment. Well, it is an investment. It's an investment into my daughter, but it's not a conventional investment. So that money, now I have a debt I got to pay back.
Hmm.
So I will start paying that back. Or
Right.
better yet, I will have my daughter pay that back slowly.
Absolutely.
Mm.
Now
Right.
she's working or doing something to generate
Mhm.
the funds and pay it back. That's great.
Correct.
So when it comes to the small businesses and there are two different concepts we are looking at. One is a cash flow concept, and the second one is velocity of the money. How do you see them as two different things, or they both same in your perspective?
There's so much overlap there. There is so much overlap. Um, I used to be all about how much money can I accumulate, and
Right.
I am no longer like that. That guy is gone. Um, I am all about cash flow now. So for
Hmm.
me, the most important thing is how can I make my money make more money for me? And that's where small businesses could shine with this. Because what
Right.
they're doing is, they take their money, the profits, they put their profits into the system.
Hmm.
Once they have their payroll, they have their taxes or whatever expenses, the money comes out, it still continues to grow on the back end. So when they
Hmm.
need more money, they can still go back into the back end and tap into that even more.
Hmm.
The uh, the rates are much better than the typical banks. It
Hmm.
continues to grow, but it's about compounding. Somebody says, compounding is like it's one of the most miraculous things that we have in the world
Yes.
because, if you have $150,000 and you borrow $100,000 to, for this business purchase, equipment purchase, your money's still growing on the back end as $150,000. It's
Hmm.
not growing as 50.
Yeah.
And you get a lot more interest. You get a lot more money with that, you know.
Right.
And then every year, you make premium deposits every single year until the amount gets so big that you can afford to borrow money and not pay it back for a couple of months or even a year or two, depending on the scenario that you're in,
Right.
because of how much money it's making on the back end. And that's because of the compounding interest that's
Now,
taking
if we
place.
take the same situation as you have $100,000, you put into the down payment, and now you were able to buy a $500,000 equipment or building or whatever the necessary items for running your business, right? Now, when you are paying back, generally we look at it as okay, now we have $400,000 borrowed from the bank, and we are making payments against $400,000. Now, it may be in the span of 4 years, 5 years, 15 years, whatnot. However, once you pay off that loan, but your actual $100,000 you invested into this exercise is evaporated, right? Now, what do you suggest to recoup that $100,000 that a small business owner should be doing it,
So think about it this way. If you weren't using this system, tell me how the scenario would play out, Sree.
right?
So if you put money into your Capital One,
Hmm.
you borrow money from there.
Yeah.
Okay. Now tell me the scenario if you borrow money from Capital One. You borrow the money for equipment.
Sure.
Then what happens?
So the
Then,
equipment will be producing the products, and which produces the profits ultimately,
okay, right.
right?
And where does the profits go?
To pay off the loan and to use it for whatever the other purposes.
Right,
Generally, the profits will be used
right,
either for personal purposes or whatever the
correct,
necessities.
correct. Now, when you pay off the loan, if you're just using Capital One or it's just a normal bank, they're going to charge an interest rate.
Absolutely.
Right. Now, you pay this interest.
Hmm. Hmm.
Now, people only focus on the rate of interest. I look at the volume, and that's a whole topic for another session.
Sure.
But you're still paying interest, and that volume of interest is money leaving your pocket forever.
Absolutely.
It's gone.
Absolutely. It is gone.
Now, let's switch it over to the infinite banking system.
Hmm.
Now, you borrow money, there's going to be interest you have to pay.
But
Okay?
that goes into your own. bank.
But the interest goes back into your own system.
Right.
When it goes back into your own system, you recapture that
Mm-hmm.
completely. So what happens, so I call that inside debt. So if you're
Mm-hmm.
using the Capital One, I say, that's outside debt because you're depending on somebody on the outside to
Right.
borrow money.
Right.
So now Sree, you're using your own Bank of Sree, that's considered an inside debt. So you have to pay that back. And yes, there's interest to it, but it's going back into your own account and you have total control over how you pay that.
Right.
So you can
So
pay it as
what you
high
are
as you want or
suggesting
as
here is,
fast.
so what you're suggesting here is to start building your own, uh, your own
System.
capital or your own system where you continue to contribute it and make it available and be able to use it when needed, opposed to going and borrowing on a credit card or on a bank
Correct.
when you really need it.
Correct. Now
I see.
here's the um here's something you need to consider.
Hmm.
This doesn't accumulate quickly. It's a slow process at the beginning,
Yes,
just
correct.
like anything else. And anytime you start a business tree, what happens? It's a slow ramp up. But
Hmm.
then once business starts going, then you'll see profits coming in. When you're setting up a system, it's the same way of thinking. It
Correct.
starts off slowly. People
Yes,
will look at it in year one, year two, they won't see the advantages of it. Wait till year
right.
5, year 6. They'll be like, whoa, what happened there? When you hit year 15, your mind's going to go crazy. And you're like,
Absolutely
wow, this is amazing. I wish I did this before. How do I get more money? How do I get my kids to do this?
correct.
Because this is family and business. It works for both scenarios.
Awesome, awesome. Kish, thank you very much for joining us today. And the velocity of money is where the power, and the compounding is one of the wonderful, magical financial tools that have been given to us. And those who are listening to us here, so you can take away how you can make the best use of money. Don't let the money sit in the bank and wait for just simply getting the interest rate. Now, once you put that money to proper use of it, you are actually making tenfolds of rewards. And also, as Kish has mentioned, we are looking at when you are starting in the beginning of accumulating the capital that you wanted to use it for the future is going to be a slow process. But be patient and continue contributing to it a little bit. And then once you have a certain uh, threshold is crossed, and now you all of a sudden have something that is available that you can use it and multiply it faster. And hope you can take this technique and apply in your business and continue thriving. More importantly, you will have a stable foundation when you have a proper financial system in place. And if you have not subscribed to us, please subscribe to us. And if you can like us and click the bell icon, that'll be greatly helpful. And share the episode with one of your friends who may be able to take advantage of these techniques and be in a sustainable business. Kish, thank you very much for joining us, and greatly appreciate your time and sharing your knowledge.
Thank you so much for having me, Shree. Take care. Have a wonderful day.
Yes.